I guess that the two that we started with, Cafe Sunlight and Acumen, both came out of fairly large organizations. One of the reasons for including Kivo Ebiz as one of the case studies on this course is that it does represent a fairly modest step into the world of trading that nonetheless I think has great social impact and social value, and you'll see I think where it's a sort of triple win situation for the people to whom it's providing a service, the volunteers, and to Kivo as an organization. As I say, a smaller example, perhaps suitable for people. I think it has fairly wide application for a number of organizations, although you will see that having some stuff in place before you start, so thinking very clearly, as we said, about where people are now, and therefore using that as a basis to make decisions about where they go soon, is critically important, we think, to the clarity both of your strategic planning and beyond that to attracting investment for your particular idea. So I think with that, I commend you to the film. I don't know how many people have already had a chance to look at it, and I can't remember exactly how long it runs for. But you have the link that Yao has provided, so unless there are any immediate questions, I suggest that everybody has a look at the film, and we'll come back in 10 minutes when everyone's had a chance. Just to check though, before we all go to the film, are there any questions, hands up, or any comments? Okay, yeah, I'll pop that in the box too. Lisa.
Oh, nothing much. It's just that I just want to tell everybody that just arrived, that's all. Good morning, everybody.
Good morning, that's great. And we're hearing you loud and clear. Matt.
Hi, yeah, it was just a point about download speeds. I think the film's about 10 minutes, but I was struggling to get it to play consistently throughout, so other people may have issues. Also a question about which film it was, the one on top or the one on bottom.
Thanks for that. Steph. Okay, Steph doesn't seem to be picking up. It's the film on top, I think, to watch first. And yes, Matt, you're dead right. People's download speeds do vary a little bit. We'll be a bit flexible about when we come back. I don't think it runs for quite 10 minutes. But when you've finished watching the film, if you put a tick to say that you've watched it, and that you're back in the room, that will be useful, and we'll wait for the ones with the slow download speed. I think you can either click onto the link in the box, or you can click onto the link in the introductory email, or some of you may have done what I've done, which is already put the field up so that you can watch straight away. Let's just see if we can hear Steph, because this is quite critical. Steph, are you going to have another chance to try to speak to us?
Hi, I'm trying again. I keep trying different computers, Hugh, and I've been through all the audio tools. Nothing seems to be making any difference. I can hear you all fine.
And we can hear you, Steph, which is absolutely fantastic. So we've just asked everyone to go away and watch the film. It is the top film that we'd like you to watch. and tick when you've managed to watch it all and you're back in the room. Speak to you all shortly. Sorry, Mohammed, are you wanting another sound check? Do go ahead. I'm sorry, we're still not hearing you. I hope you can participate as best we can. Do separately try and speak to Yao and see if he can sort you out.
Hello? Just checking if anybody's still there and if you can hear. Yao or Hugh or anybody, Vicky?
Hi there. Can you hear me, please?
Certainly can.
I have got a problem. Because I came late, I'm not clear what I need. Sorry, I'm not sure. Have you heard me or not?
I can hear you, Elia. I'm not sure if anybody else can.
Hello, Hugh. I'm just wondering whether you're there. I think most people have got ticks next to their names. So most people have sort of finished watching the film now. I have been in contact with Elahe, who wasn't able to watch the film. I think there's some sort of restriction on YouTube, but I've advised her to sort of check out the film sort of later, maybe sort of at home. So we're just waiting for LM and Bellevue. We only need to sort of watch the first video for now, as Steph will be sort of talking about the business shortly. So Hugh, if you're there, I think we could sort of kick off probably.
Thanks, Yao. Sorry, everyone's a bit confused. There are moments when there's sort of blank time in this process while we wait for everyone to rejoin. But I think most people now, I hope, have managed to watch the film. What I would remind you about, I suppose, at this stage is that on this course, what we're looking to try and help you with is strategic planning, investment readiness, and pitching your ideas. So in all your thinking, and when we go to breakout rooms, would you bear those things in mind and take a critical approach to the material that you've been presented with, thinking about those things? But let's have a bit more baseline information, and I'd ask Steph if she's ready now to take us through the balance scorecard for Kivo Ebiz and to update us on where the project now is. Steph, are you ready? Medea, over to you.
Steph, just checking that you're back with us and ready to take us through your balanced scorecard.
I picked up the microphone and I hope you're hearing me. Hugh said he was hearing me, but is anybody else hearing me? Yes, I can see some smiley faces. Sorry about that. What I was saying is that I hope nobody else had the same problems that I had this morning, because it's usually absolutely great coming on to Illuminate. And my very, very simple problem, I'm ashamed to tell everybody, was that there's a volume control on the actual lead of my headset, which I'd never spotted before, and it was right down to 0. So 4 computers later, I've managed to sort out just what the issue was. Right, so just getting on to the balance scorecard. Because I'm in the 4th different office, oh thank you, it's just come up in front of me on the screen. Just to say where we started from back in 2006, I have to hold my hands up and say that we haven't actually got all the things that we strongly recommend to everybody. We hadn't got a vision really, and we hadn't got a business plan. What we'd got within our organisation was panic, which is not a good thing. And we desperately needed to earn some income without having to shell out and without having to go to funders for the money. And this was a sort of a light bulb moment that we'd been looking to sell 1 or 2 things at home on the internet, panicked about it, about the security of it and everything else, so thought it might be a good idea that other people would value it. Now, the opportunities that have grown from it, I don't think we could have ever really envisaged back in 2006. And what we've done is just run with those opportunities where they've fitted with our overall vision. And obviously the overall vision was to give a service for the community and make money for the trust for other projects at the same time. The opportunities, just to, I'm not really going through this in any logical order, but the biggest changes I made to this scorecard recently, I sent Yao only yesterday, but I don't know if you've actually got this updated copy. But the opportunities that have developed recently on a number of levels have been about our links with other charities. Finding that other charities see this quite definitely as a way forward. And a breakthrough we had just a couple of weeks ago was with Age Concern. And Age Concern from Blackpool wanted to turn one of their 5 shops into an Ebiz selling point for their more valuable goods. And came over to see us for some consultancy and a couple of days training on the model, and I was delighted to see that they want to take that a step further to where we actually are, that instead of just 100% donation of the goods from the community and selling them, they are actually looking at our model of giving back a percentage to the person that brings the item in. The reason I say that I think is a good move and development for them is because I think in these times particularly of the recession that people don't want to give away that very valuable item. They'll give away the junk that they want cleared out of the house, but quite valuable things, like we've had recently a silver tea service we sold for over £1,000. They're not going to just give that to a charity, but they'd love to give it to something like Age Concern or their local charity if they're going to get something back from it. I think I'll just stop for a moment because I seem to have spoken for a long time and just see if there's any questions on that so far.
Steph, thanks very much. I know it's difficult to, keep going for ages without any response. could I suggest that you take us through perhaps the way that the business model has grown and some of the essential ingredients that you had in terms of starting this? Because I know you said you started in panic, but actually you had some very good things in place before you started.
Okay. Yeah, the good things that we had in place was we had very committed volunteers both on the board and as general members of the trust. We have quite a close community. As a former mining community, they do tend to be quite close communities and everybody knows everybody. So we had a number of volunteers, which really was our greatest asset. So we were able to, and the great thing about this business model is that you can start on any level. If you've just got one volunteer selling, I don't know, 20, 30 items a week, that level can be managed and it's still bringing income in from day one. And what we'd got was 2 volunteers to start with who were doing, as it said in the film, about 20 hours a week on this. So it was bringing regular small level income. What we then quite quickly found out was that the community did want to learn to do this themselves. People told us this was a bit of a risk because we were actually possibly shooting ourselves in the foot with it by training up the community to do it for themselves through our classes. Then they wouldn't need to come to us anymore. But we actually found the reverse was true, because we'd take about 10 students every term through the course, eBay for beginners and then eBay a step further. And we found at the end of the course that people would, you know, with a bit of gentle, humorous persuasion, we would say, right, we've given you the training, now how about coming doing some volunteering for us? And we'd find that from each course we'd have 3 or 4 regular volunteers then. And of course the course itself was very much hands-on apprenticeship. So they'd either bring their own items and we'd help them through the different processes of the sale, or they'd use our items that we'd had brought in by the community to sell. So they were actually doing some of the work through the class for us as well. So that was how it started in terms of our human resources. It was totally voluntary for about 3 years, and then it was last year that we realized we couldn't cope with the level of demand without people having to wait a long time for their items to be sold. So we went to Key Fund, and the project, obviously, because it had already built a reputation, it was well established and it was earning income, it had already proved itself, and Key Fund in Yorkshire were quite happy to fund this for a salary for 3 years for somebody. So we now have somebody employed part-time, which is what we'd put that we'd aimed for in 2008 with the business model. Just looking through, yes, on the later, I can see that you have got the up-to-date links there with the high streets and charities. Just one other thing that somebody's very kindly highlighted for me to mention, that's a great idea, was the registration with Mission Fish. Because another great advantage we found after a short while as just trading as a straightforward business on eBay, we did find out about Mission Fish, and that's the overall charitable organisation that monitors charities on eBay. And by registering with Mission Fish, we found that we got all our listing fees back. So that saved another 8%, giving you an 8% advantage over private sellers on eBay. The other thing that gave us a great advantage over private sellers on eBay is actually just being on there with that blue and yellow ribbon as a charity. People that are looking to buy on eBay immediately see that as a trust symbol. which it is, of course, that you're a bona fide charity. They like to help a charity at the same time as buying what they want, and they also feel that they're not going to get ripped off by a charity. I don't know if there's anything else that you want to highlight, whoever the magic highlighter is on there. The other thing that we are doing currently at the moment is updating all the marketing strategy, and that's just in time for going to the FTSE tomorrow, which some of you may well be going to. Don't know if there's any smiley faces that some of you are attending the FTSE tomorrow, but we'll use that marketplace tomorrow to actually take our new marketing strategy, and we will be showing other groups how we can actually make this a national link to Ebiz's nationally and pass on business that we get coming in different areas. So we've gone as far afield as Hastings, as Aberdeen, as Blackpool, Derby, basically every area of the country. And if groups do want to set up their own Ebiz, then we can now, through the website and through a network link, we will actually be able to pass on business opportunities to those groups in their area where we get contacted through the website, and we'll also be able to share the model and the website with them. Is there anything else that anybody wants to highlight on that particular area of the business model that we're on at the moment? I can just see one other thing on there that we're finding is growing and growing is the link with local businesses, and that is definitely something that we'll be moving forward on more and more in the future. It's much easier selling where you're selling in bulk, and it's much more profitable. I had a little bit of angst about that because I was determined to keep doing the community service, which we will do, because members of our community love to be able to bring their things to sell with us, and it brings them good income. But we will get more income for the charity itself, and in the end benefit the local community more by the links with local businesses and selling their stock. It was an interesting communication from Steve Weiler on the Chief Exec's newsletter to everybody, or report to everybody, talking about his link with Tesco and looking for opportunities with the link with Tesco. And I would certainly like to see something, and I've emailed Steve back on this, that Tesco comes in on a level of where we can actually do that nationally, that we can look at their surplus stock, their old stock, or their new lines that they want to try out, and through different Ebizes for charity, we could actually look at selling the stock that way for them. Seem to have gone on a long time again. I'm just pausing. Right, the financial returns. Just looking it over myself, we have not increased the trading turnover with the member of staff quite as highly as I'd expected to, because it's only been 6 months, 7 months, but I think a lot of that time has been spent in actually, with the two of us working together, changing the policies and the processes to really get that into line, because I think our processes could be a bit chaotic originally because it grew faster than we'd actually put the processes in place. So we spent a lot of time really updating our processes rather than increasing the amount of goods put onto eBay. So our profit hasn't really changed massively, but I think that will take a leap again in the next 3 months or so, when we've got all those processes back in place. We did, as I've said already, we continue to have training income through adult community learning and through neighbourhood learning in deprived communities, and that may well be some funding that other people can access to put training on for their volunteers for selling on eBay. We have found that small grants, or it does attract and is very attractive to small grant investors. So we've had grassroots investment, for example, key fund investment we mentioned, various training income. So the small grants that have built up quite substantially over the last couple of years have been very beneficial. We haven't had to depend on them, so they've helped to increase our reserves. Annual surplus of 40k for 2010. I think we may well hit that. Our surplus for this year, I would say by the end of this financial year, at the moment it's standing at about 25, so it probably will be 30 by the end of this year that is obviously donated to the parent charity, and hopefully by 2010 I think that will be 40k. Any questions, Hugh?
Thanks, Steph. I think that's great. Could I just add, Tracy, to be a little bit more specific about two things? Could you talk about the terms of the key fund deal? Because I think that was a mix of grant and loan. And could you also say something about the balance between trading income from selling stuff on Kivo and the training income as it develops? I think that'd be useful. And then I see Jed's got a question for you.
Okay, yeah, the key fund was a matter of grant and loan, and the reason we went for that, because we'd been determined right from the start that we actually wanted to stay away from any loan, but we felt we didn't. It was a bit naughty, really, because we felt there was an opportunity for 10,000 grant and £20,000 loan, and of course we would love a £10,000 grant. We didn't particularly want the loan, but felt we could invest that in a savings account, and that's exactly what we did there. I don't know if that's the way it should be done, but I do know other groups have done that in the past, and Key Fund are aware that we have done that. So we've worked the capital. Unfortunately, the returns on that, now that interest rates have gone down, aren't as great, but we have got that in at a fairly good rate, so it's looking after itself. The training income basically has covered the training. It's not made any profit for us in terms of the enterprise, but what it has brought in, obviously, lots of opportunities of training for the community, lots of social benefits there, because they have quite often, as it said in the film, gone on to other training. So lots of people have found ways into work through that. A lot of the volunteers on there expressing the growth in their confidence. They've gone on to things like digital imaging, because obviously they do the photography on eBay, and it's quite a wow factor when we do the editing software with them. That, you know, that it's quite an eye-opener, that they see that as a great opportunity and often go on to a very specific course on that. They also quite often realise the weaknesses in their own IT skills, so quite often they'll go on to further IT training. So it does bring in more footfall into the trust. It doesn't make massive profit. Certainly with adult community learning, it pays now for only about half the course, and that the students have to pay partially towards the course themselves. But as I say, the opportunity there is that it brings in volunteers, and the human resources are really important for doing the trading. Shall I answer the question now?
Hi Steph, it's Jed here from Liverpool CVS. I was quite interested when I looked at the balance scorecard, that on the sort of centre of it, in the financial return bit, you had the overheads weren't calculated and they were absorbed by the parent charity. And then in this middle bit under organisation development, you had that you were going to look at a full cost recovery model so the trust got paid. Have you now got to the point where the trust is no longer subsidising the business, because that would certainly be a big thing to organisations I advise, because otherwise they don't want to actually take on a liability. They need to get their costs returned.
Hi, Jed. It's a very good point, and the way we've handled that, again, we worked around that from the beginning, that the project doesn't actually have to have any physical space. And when we first started the project, I mean, the other thing, you have to realise this in the context of our organisation. We have a building where we deliver training, which is one of the main things that we do, but we also, as one of our other enterprises, we have managed workspace. Now, at the time that we started Kivo Ebiz, there was no available workspace within the building. It was all let out. And in actual fact, all we were doing was the goods were staying in the person's home, we were photographing them there, all we were using either at the trust or at home was a computer. So there was no payment to be made in actual fact to the trust for space. As the business grew, and I was having more and more of this stuff in my garage or living room or wherever at home, it did become a bit of an issue about the space, but we were resolving that by saying, sorry, we'll just come and photograph it at your home and then we'll collect it as and when it sells, which is it's another way of doing it, which you can do if you haven't got the storage space. It's also, in some respects, a little bit makes you feel a little bit more secure in terms of the liability as well of having people's goods within the building, especially if it's valuable goods. We'd still actually now prefer to leave it at the person's home if it's of a high value. So in terms of the space, what happened was at about a stage of about 12 months ago, at the beginning of the recession, maybe 18 months ago, the trust was struggling in its other enterprise in that it was losing tenants from the building. It happened that we were at the stage of where we were making very good profit at that time, and so what we said is, right, we'll take, instead of just donating you the profit, we'll actually take one of the rooms. So either way, it was little difference to the trust. Instead of paying them the profit, we were paying them for room space. But what I'm trying to say here is, if you are paying for room space, obviously you do need to take that out and look at your break-even point. So you've actually got to sell quite a lot of goods at only 20% profit before, if you're renting a large size space, to break even. So that is something you have to bear in mind. We reckon with the large space that we're renting at the moment, our break even point is 1,600 per month of sales. But as I say, you don't have to have that space.
Cheers, thanks, Steph.
Few more questions, and then I think we need to move to the breakout rooms. So, should we deal with them in order? Perhaps I would suggest that we have all three questions first, and then let Steph answer them as a group. Is that okay? Over to you, Jem.
Hi, Steph. I was just wondering, you mentioned a register with mission fish. Can you tell us, a little bit more about that? What is it and what does it do and how to register?
Lisa?
Right. Just Steph, it seems to me that the whole business, when we started, we quite need, like to have some funding to support us, like to get it started. So because I realized that you got some funding from Dragon's Den and like some grants as well. So it seems to me that we really still need to rely on funding at the beginning. Is that correct?
Matt?
Hi, yeah, I was just wondering what the reasons were behind the 20% split and not any other number of split of profits.
Right, three excellent questions there. I'm really smiling at Matt's question because if I answer in reverse order there, Matt, it was historic, really, and any groups that I consult with now, I definitely don't advise them to start at that level. We were very, very naive when we started out in 2006, and we were actually originally saying 10%, and we were carrying the burden of the eBay fees. So by the time you took that 8% off, originally we were making about 2%. So we were extremely naive, and it's been a very, very steep learning curve for us. So the reason I think we can be quite good advisors now is because we've probably made every mistake possible under the sun on developing this project. So that was because so we changed quickly from 10% to 15% to 20%, which, you know, there's only so much you can do there without losing credibility. So I would actually advise to definitely to start at a higher percentage. I think you can get away with some increase in percentage, but certainly what we've done through our marketing material now, and what I would advise others to do from the outset, is to offer different levels. So now when we have a new client come in, we give them a form where they make a list of the things they've brought in. They write on at the side of it the minimum price that they would like it to sell for, at which stage we'll do the research and say to them, well, that's a bit unrealistic, we couldn't possibly sell it for that, or that's fine, that's a good place to start. We'll give them advice on that. But what they then do is tick a box to say whether or not they are donating 20%, which is our minimum, 50% or 100%. And of course, with a number of charities, people like the main, high street charities like Age Concern or Cancer Research or whatever, they are generally expecting 100% donation. So I think each group has to start at the level they think is realistic for their community. I think during the times of recession in a quite fairly deprived community, I think it would be quite hard to expect more than that. In reality, because the client does pay the eBay fees as well, and that we get refunded the eBay fees, our share is actually more realistically 28%, and we do tend to make a little bit on postage and packaging as well, because all our materials are recycled, so we save some money on that. And we don't make a lot on postage, but we do make a little bit on that. The next question was, oh crikey, I've lost it. I'm going to have a reminder, quick reminder.
It was about, did you have to start with funding? Should we expect that you have to start with some funding?
Thank you. Definitely not. And I mean, it shows in there that we got Dragon's Den £15,000, but we'd actually been going 6 months when obviously we couldn't have applied to Dragon's Den unless we were already started and we'd got the idea. So we had already started, and you can definitely start this business with just a computer and a digital camera. I can't think of any, and a tape measure. That's it, basically. That's the absolute minimum. Other things are a bonus, but of course, if I can just make a plug here, you do have Cultivating Enterprise through the DTA, which I don't know if any of you have been on that. I don't know if I can see some smiles. But through Cultivating Enterprise, the DTA will offer a grant and some support of up to £5,000 and some days support for enterprises that are starting up. But I do reiterate that because that was what was very important to us. We didn't have a penny of funding. We were in negative equity at that stage. Sorry, and the third question.
Was it about Mission Fish, a bit more about that?
Yes, sorry about that. It wasn't a great idea, Hugh, 3 questions at a time with my goldfish memory. Yeah, Mission Fish. It's very simple to get onto. You have to be a registered charity and your charity number. And if you go on the eBay site and go on the help, and just key in Mission Fish, it will go through the process for you of how you register with Mission Fish. It is free, and they basically just do a check on you to make sure you are a bona fide charity. They'll ask for your copy of your arts and mems and your charitable status number. And sorry, the other thing about when you registered with Mission Fish, so you get all your eBay fees back if an item sells. So you will get your listing fee back and you will get your final value fee back. So that's equivalent to about 8% of the sale price. So when I say we were taking 20%, as I say, we actually in reality get 28% of that sale price. If it doesn't sell, you don't get your listing fee back, but that tends to be quite a small amount of money. And with experience in the business, you know not to list something at a price where it won't sell. Thank you.
I think we'll move to breakout rooms now and have a chance to discuss this in more detail in a smaller group. What I'm going to do is just take a minute or so to move you all into a breakout room. There'll be a screen there and one of the facilitators will take some notes. And when we come back, we'll have a chance to feed back some of our thoughts and our comments to the rest of the room. So bear with me for a minute or so and I shall move you all to the various rooms. What I'm going to do is set a little timer running and you'll see that will count down 15 or 20 minutes. And then when that is finished, I'm going to bring you all back to the main room, and it can be a bit abrupt. You'll suddenly be whizzed back, perhaps in the middle of a sentence, into this main room. So bear that in mind and do keep an eye on the timer in your conversations.
Okay, I'm just going to try and talk over while Vicky is putting us all in different breakout rooms. As well as discussing the specifics of, you know, the Kivo Ebiz model, I would like you to bear in mind and reflect on the 3 core skills that we're talking about in this course. So strategic planning, as exemplified by the balanced scorecard, investment readiness. What are the essential ingredients required to demonstrate capacity, credibility, and give confidence that the business model can be delivered and that growth aspirations can be realized? And finally, also just think about the way in which the idea was pitched to you in the film and the way that you've heard Steph talk about it this morning, and think about whether or not you think that will give investors confidence in investing in your business. Okay, that's all for now. I'll see you in the breakout rooms.
Hi, could I just make one more point before everybody vanishes into the breakout rooms? Just thinking about investment readiness, and I think one of the things that I would like to talk about certainly in the breakout room that I'm in, is about the partnerships in this, because partnerships have become extremely important to the development of this business. And one that I didn't mention, again, that's quite recent, an exciting partnership, is Link with local hospices, because local hospices are now bringing their goods to us, to local hospices. They'd read about us in the local newspaper, and what they find is they have a lot of goods donated to them wheelchairs, bath lifts, all sorts of quite large equipment that they actually can't store in their hospice shops. They don't have the space for. And so they've started bringing all that to us. And if you think about the different partnerships that you could actually build within your community of other charities, hospices, whatever, where goods are donated and there's an opportunity for selling them on the internet, or training those groups to do it for themselves. So it can operate on a lot of different levels. Thank you.
We're all back in the main room now. I am sorry if that felt a bit abrupt. You're suddenly rushed back sometimes in the middle of a sentence, and there wasn't a great deal of time, but I hope enough time for us all to have had a chance to really dig down in smaller groups to some of the really interesting issues around this particular enterprise. What I'm going to ask is that one person from each of the groups to feedback very briefly, just perhaps 2 or 3 points that were raised. And if there are a couple of questions, perhaps Steph would be able to answer them. But I would like us at about 20 to 12 to have a chance for a break before we come back for the second part of the session. So unless there are any questions, Jess, perhaps we could go over to your group first and you could give us a few of the points that you discussed.
Okay, my approach to this is to write notes in a text box and then bring them in like so. I don't know if you can actually see them though. Let's have a look, see if I can make them a bit bigger. So we aimed to consider the pitching question. Does the business model come across from the balanced scorecard and the film? How does the balanced scorecard help in terms of developing the planning of the business? And what would you ask, Steph, if you were an investor? So in terms of does the business model come across, we felt it certainly did come across. People in the group understood what the business was about, but we were asking questions about whether it would work in a different kind of community. Steph was with us, so she was able to say she felt that it wasn't so much a competition with other charities, but I was raising the question. I passed a private shop that's opened in a sadly closed toy shop. We had a toy shop for 80 years. It closed down in a recession, and the shop that has opened there this morning is a private buy, sell or loan shop where local people can bring their stuff and drop it in there and get some money. So I think the competition is going to come from fairly sharkish private companies. In terms of communities doing this, as Steph says, it's still a new and innovative idea. It would be different if you were in a big city. You'd have to look at a manageable area of that city. And perhaps the other side of this is the different options on the model, either further links to businesses to sell their stock in the auction my stuff type model, which is another version in London that you can look at their website. But also when we start to talk about investment readiness and we're talking about which items actually make the greatest surplus, it's very clear that you get a better financial return on bulk new stock. And we talked about the fact that that's a very different model, that you get a much better financial return but a lower social return. So the balance between those two types of approach, two types of goods, is crucial. I think I'll leave it there.
Thanks, Jess. Yao or Hugh, would you like to feedback from your group?
Shall I go first? 3 comments, I suppose. The first one was that this was a low startup cost, and therefore the cost of entry into this business was low, and there were concerns about saturation and competition, I suppose. The second was the whole aspect of reaching out and home visits and the amount of volunteering time that would take, but that there was potential perhaps to bolt on other services to that whole outreach thing. Then we discussed the pitch, some varying views, but in general, the impression that we got both from the film and Steph talking about the balanced scorecard is that she really knows what she's talking about, and therefore did engender confidence. Some comments about perhaps the film being a bit slow-paced. My comment on that, I suppose, was that I thought that it was a very honest film, which is the quality that I think that investors are looking for. If I may just make one comment on the business model, I was on the original Dragon's Den that awarded the first outside investment to Kivo Ebiz, and I was also worried particularly about this low startup cost and that there could be competition and that anyone could do this. I think that is still the case, but I think the unique selling point, and it was a point that the trustee who was part of the pitching team made, was that this is based on using local people who are trusted, and that is a magical, intangible, if you like, quality to it, that it is not a sharkish high street venture, which in my view is more akin to, you know, an old-fashioned pawn shop than anything else. Porn brokers rather than pornography. But here is something that is based on the unique selling point of social enterprise, that you are using local people who are trusted by other local people in order to deliver this model.
I think you covered most of the points that we sort of raised in the group. Don't seem to have worked out how to sort of get my notes on the whiteboard, I'm afraid. The other points we brought up was we liked how sort of the service and the social return of reaching out to vulnerable, isolated people. Hugh was wondering whether you could sort of perhaps link this with some sort of outreaching, sort of like health checks. Sarah was also interested in how you have started to reach out to other regions, sort of franchise model, and how much sort of you're charging for this, because the group felt it's potentially sort of quite a substantial income stream in the future. Thanks.
Great. Just a couple of things that we spoke about that perhaps haven't been spoken about already. Particularly around the fact that people were using this perhaps as a way to make a charitable donation or a way to be involved with the trust rather than about simply purchasing goods, and that perhaps the eBay model was moving on slightly. It's becoming more of a shop culture, and that Kivo might need to think about moving on to a different, although hopefully equally successful, auction site for the future. We thought that there was probably still a market for giving IT support potentially to an aging population, so certainly for the next 10 years or so. But we wondered that if they considered moving into selling training rather than selling on eBay, whether that would be mission drift and moving perhaps slightly away from the real core of this enterprise, which is about engaging local people with the trust. Steph, if you wanted to take a minute or so to just feed back about any of the questions. There were 3 groups, only one of us was lucky enough to have you with us, and then perhaps we'll take a short break.
Yeah, thanks, Vicky. Just trying to think of which to feed back on first, really. Mission drift, I think, is quite key at the moment, because we are a bit like that hungry caterpillar at the moment. We are finding so many different opportunities coming from this. We have to think very, very carefully now. We are at quite a key point in development of not endangering our original mission. And as Hugh quite rightly said, or somebody quite rightly said, that balance between the social the social benefit and the financial benefit is quite key. And we've had a number of discussions on this at board level, because it has become very clear that to actually invest in bulk quantities of new stock and create the profit from that, it is financially the best way forward. But I'm really quite concerned about losing this the social output from it. But as people keep telling me, with more money coming in, you can create those social outputs in other ways, because you are giving in the end more financial benefit to the community. I've yet to be convinced on that, but it's good that we're all still talking on that, because I know people that know me will know that I've got more of a social head than a business head, and that's quite hard to manage sometimes. Opportunities for us are always about our capacity, and we're, people have talked about competition. Fortunately, we've seen so little of this. I think people have got to understand the vastness of the opportunities and the marketplace within not just eBay, but internet selling in general. That's like saying, really, that the competition, that there's 2 shops opened on the high street. Of course there's 2 shops, there's 20 shops, there's 200 shops. On eBay, there are thousands and thousands of shops. And you've got to accept there is competition, but you've got your unique points. You've got to deliver a really top-class service, which is what we are really pride ourselves on. And I think, I'm thinking about Jess with that shark shop next door. I think just go for it, girl, because you've got an awful lot that they haven't got, and people do see through that, and people are happier to buy from a reputable charity than they are from a shark dealer. And you can be just as competitive, because especially if you've got volunteers, you're bound to have lower overheads than they have.
Is it okay if I jump in and make a comment? Yeah, it was just to sort of almost support you in your balance between the social and financial sort of gains. I think one of the really sort of, it's almost an aesthetic thing about how your business operates, and that is it brings the social benefits together with the financial. So if there's any possible way to maintain the balance to kind of get the best of both worlds, then I think that would be the way to do it, and not just chase the finance, because no matter how much finance you make, it doesn't necessarily fill the gap that is left by the loss of social benefit.
Thanks, Matt. And down the road, I would hope that we could use social return on investment or some other form of measuring that social impact that would also feed into the validity of this as a business model. Steph, I just wanted to come back on one specific that clearly people are interested in, which is if they want support from you in setting up Kivo Ebiz, how much do you charge, and what's the length of time, what's the process around that?
Again, you might not like my answer, Stu, because I have been varying this to what money the group's got available, and I know that's not sound financial sense either. So it has been varied, but what I'm trying to do, it's tended to be around £500 a day where they have funding for that, and that's certainly what's happened through the DTA Cultivating Enterprise Programme. beyond that, what I have tried to do, because not everybody that I've worked with is in the DTA. I mean, I have strongly recommended them to join the DTA, but you know, that's not a bottomless pot, is it? Let's all accept that. But there are other funders that will help people with developing social enterprise. And what I've tried to do, where groups have come for support, there's been quite a number locally that I have to say have just had totally free support. But what I've tended to do is try and help them get the funding to get the support, because obviously it's not sensible for us to go on doing that, because it's taking quite a lot of our time up away from the rest of the business. So we try to help people to source that support, and what we're finalising at the moment is trying to put together a business in a box almost, where people will have all the marketing materials, all the core documents for procedures that we follow, the key roles in terms of the different responsibilities of different staff or volunteers. Say I don't know if I mentioned that altogether already, all the procedures, even a basic website, and we'll try and put all that together in a package. We haven't actually come up with a figure on that yet. Perhaps everybody might feedback what a fair figure on that is, and then help people to access the funding to get that as well.
Thanks, Steph. I think that's great. I think, Vicky, we need a break now. Do you want to set the parameters of that for us?
Thanks, Hugh. We did originally say half an hour. I'm actually going to say, if possible, can we take 20 minutes and be back here just before 12:05? We've got a recap on some investment readiness slides that he wants to run through, and then a chance for all of you to feedback after this first session and just let us know how you feel it went, how, you know, if there's any troubles with the technology, what we can do to try and help you out. So if I can say, if everyone could step away, which is to press the blue door button, which is just underneath the participant window, not forgetting to press that again when you come back, and we'll see you all at about 12:05.
Hi there, everyone. I see we've got ticks for most people. Some people are still marked as stepped away. You may like to click back on the door if you're back with us. Could I just see ticks from everybody who's back? I think we've got most people. And I think we need to get started. Vicky, I'm happy to do my own slides, I think. I think most people are with us. I'd like to get moving so that we don't run on too late. What I wanted to talk to you about today was the bits that we missed out of the residential because I rambled on too long. Particularly around the different kinds of finance that are appropriate at different stages of the business development. I think I did the slide where I talked about there basically only being 3 kinds of finance. The first one is development risk finance that you need at various stages of a business, certainly at startup and when you're trying to grow a business. The second one is money for capital that you need, or and capital can be intellectual capital, I suppose, as well as capital goods, although there are different kinds of money that can finance those. And the third then is working capital. So I think that there's an awful lot of bamboozlement that goes on in the world of finance, and essentially I would reduce most things to those three categories. So I want to talk a little bit about, no, I'm on the wrong slide. Vicky, I think I do need your help. Okay, where are we getting to? Thank you. I want to talk a little bit about borrowing money, and we heard that Steph and Kivo Ebiz did borrow money from the Key Fund, and although they didn't use that money, they were at least prepared to take that on board, and perhaps at the moment are standing the difference between the cost of borrowing and what they're getting on deposit. It does seem to me that it is legitimate when you have an established business stream to fund some of your working capital as part of debt. Most social enterprises, community enterprises, charities tend to operate always in surplus. If you look at small business, they very often rely on overdrafts for working capital. And I think that while it's important not to borrow too much, clearly, that sometimes I think that we're a little bit too risk averse in the sector, and as long as you borrow the right amount of money, it can help you go further faster, as the slide says. The technical term for the amount that you borrow is gearing. That is usually either expressed as a percentage of your net worth or a percentage of your turnover. Very highly geared businesses tend to have big gross margins, which are associated with high cost of entry, lots of capital investment, and, as I say, high gross margins and what they turn out. In the service sector that most social enterprises are, we're talking about relatively low gross margins. And so the amount of gearing that we're suggesting is not very high, but on the other hand, it does provide an opportunity, and I think a willingness to take on loan finance can also be a key to raising grant finance for them from those social investors who are offering a combination of the both. No, Vicky, you'll have to do the slides for me, sorry. In terms of thinking about the amount of debt that you can take on, we're really looking at the quality of revenue streams in the future. So an established track record where you can show that you've been trading for a while, that you have a margin, and that you have a surplus that could cover debt is what people are looking for. When you're presenting your ideas and thinking about borrowing, do think very much about the quality of those income streams, particularly in the very volatile economic market that we're in at the moment. Certainly, I'm still involved with Key Fund, and on our investment panel, we're looking for completely up-to-date figures because people's trading performance is changing, and so, you know, last year's accounts perhaps filed at the or completed at the end of March, at the end of the financial year, are no longer up to date enough for us to make a judgment. And I did talk about this pig on pork multiple risk, where you are talking about doing, in fact, effectively starting a number of business streams at the same time. If you're borrowing against capital assets, then clearly your tenure on land and buildings, the kind of lease that you've got, is going to be important. And if part of that is funded by grant streams that say that you can't use the building as security, that will affect the investor's perspective on whether or not they want to invest in you, because it reduces their ability to take security on the building. I should have said that people should be putting their hands up and interrupting me as we go if there are questions on this, but I do want to whip through this fairly quickly. I think the other important concept, and I think it is the unique selling point of most social enterprises, is the whole idea of social return on investment. I think the keys to this, and I think we saw it demonstrated by Steph, is that you really, one of your unique selling points, one of your competitive advantages can be that you really know your neighborhood or your community better than anybody else. And so that that I think is one of your competitive advantages, and being able to demonstrate, and I think that came across in the film, Steph talking about a former pig community and that kind of thing, that you really know the place that you're talking about and the place from which you're going to operate your business is fundamentally important. The other idea that again we touched on in the residential section, and you remember I scribbled on a flip chart, is about the cost of doing nothing. I'm based in Manningham in Bradford, where people in the past 10, 15 years have rioted occasionally, which really focuses government's mind on the cost of doing nothing in this immediate community. It doesn't need to be as dramatic as that. And a lot of the new policy that is being discussed in the context of cuts, I must admit, is about how government can switch its expenditure from remedial expenditure to preventative expenditure. And so quantifying the cost of doing nothing is really important. There are a number of methods of measurement out there. There's some of them listed there, and we can certainly signpost you to a whole load more of those kind of things. What I would say is, at the moment, I think that the cost of doing this, and particularly following some of the methodologies like social accounting and social return on investment, can be quite high, both in terms of real-time costs and collecting the information. I think the way into this is to start small and to use the information that you're already collecting, and to build into your business model the collection of that kind of information that is going to be able to help you prove the social impact that you're talking about. Will you move me on, Vicky? I just wanted to give you one example. It's the Development Trust in Manningham that I've now been associated with for 16 years, I think, since we started. It was a former mill building. It was a joint development between the Development Trust ABL and the local authority, and is a 36,000 square foot managed workspace building. What you see here is the old heritage frontage, and the building extends a long way backwards. It was a modern extension. It is a community space and offers community, we also do conference and meetings and a number of community facilities. And about a quarter to a third of our tenants in the managed workspace are themselves charities or social enterprises. So I think of it as a social capital factory in the middle of Manningham. Next slide, please. The basic numbers for ABL haven't changed much over time. The building is more or less full. It dips a little bit. I suggested that if you're thinking about a building-based scheme, that probably 85% occupancy is what you should be using for calculating your break-even points. It's in a low rent area. It's not a very smart part of town, and therefore we can't charge very high rents. The service charges, that is all the additional things that we provide, security, insurance, reception, cleaning of common areas and that kind of thing, as you will see here, actually represent more than the rental income. But these are in and out things. These are absolute costs that we distribute across the tenant base. You'll see that we have quite a healthy rental income from sessional rental, and the total turnover is about 600,000. The figures are actually a bit old now, and anybody who's interested in more detailed figures, I can get hold of those. Asset valuation tends to be based on a multiple of the gross rental income. I've excluded in the calculation shown the service charge because that's just an in and out equation. But the rent plus the sessional rental gets to 330,000. Now the multiplier that you use is entirely dependent on how secure that is. Now we've been operating in the building. It opened in 95, 96, so we have over a 10-year track record of occupancy that's never, I think, dipped below 80%, and so perhaps applying a 10-year multiple does give us an asset value. The story around ADL is that it was a joint development with the council. The development trust was given a management agreement, which was supposed to be a rolling 3-year agreement, but when we went back to try and renew it, the officers said, we've moved, we've lost the agreement, we're not sure about it. And we started to press them to buy the building from them. They came up with a valuation of 750,000 because of the restricted use on it, and we bought the building from them. The debt finance that we used, it cost us 50,000 more than the cost of purchase to cover all our costs in terms of solicitors and that kind of things, was a very early stage investment from the Adventure Capital Fund that was on very soft terms. It was 10 years at 1%, but more importantly, there was a provision that said that we didn't have to pay back the capital if we could demonstrate that we were reinvesting our surpluses in the community. And I'm happy to tell you that as of this September, we have proved to Adventure Capital Fund's satisfaction that we have reinvested 300,000, and they have therefore forgiven us the repayment of that capital sum. We borrowed £250,000, sorry, back to the other slide, from Barclays Bank as a result of a beauty contest. They were our existing bank, and I think it's always polite to include them. We went out to 7 banks. The best offer we got was at 1.25 over base rate from another bank, and we went back to Barclays and said, we'd like to do the business with you if you can match those terms, which they did. The last portion was a fixed rate agreement with Bradford Council to repay £250,000 at an embedded fixed rate, which is 5.5%. So a balance of debt finance, some very soft social investment money, some floating rate money, and some fixed rate money. I have to tell you one final thing, that earlier this year we took advantage of the very low long-term rates to fix in the Barclays debt, which is now fixed in at about 4.5%. We're paying 5.5% to Bradford Council. That gave us some security that if all this quantitative easing does lead to huge inflation, we have known costs, and it's against a fairly fixed income stream. Next slide, please. Just finally, where do you get it from? I think it's always polite to go to your own bank. If you've got an overdraft with them, they've probably got something called a negative pledge clause with that, which says that you shouldn't borrow from anybody else without their permission. But I just think it's polite and good manners to always tell your own bank what you're doing. Banks hate surprises, although they spring them on us, of course. There are a number of sector specialists. Again, we can provide more information about this. SELF is the Social Enterprise Loan Fund, which is a national fund. There are numerous regional CDFIs. I've included the Co-op Bank there. Some people think that they behave like a normal clearing bank. Other people say that no, they have a particular bent towards lending towards social enterprise. Future Builders and Adventure Capital Fund, Community Builders and Department of Health are now all combined in the one organization, which is called Social Investment Business, although those four funds are all run separately. And in some areas you have regional development funds. Just finally, I want to talk very quickly about equity finance. Equity is risk finance, next slide please, is appropriate particularly for startup. There is a legal structure called an Industrial and Provident Society that allows organizations to issue shares locally without going through all the expense of complying with something called the Financial Markets Act, which makes raising money publicly very expensive. I think that if you can raise local risk money, either through donations or through selling shares in your venture, that it is a fantastic lever for getting in other money. And you will see on the slide now up that there is an increasing trend towards raising community shares, money for community shares. It's something that I'm working on in the wider field at the moment, and there is a website, we'll post the address up, called Community Shares that has a lot more detail about this. But just looking at the next slide, a couple more details. These are the kind of ventures that have been raising money for through community share issues. Renewable energy is at the top, but there have been an awful lot around buyouts of local shops and pubs. Community finance institutions have been using it, and increasingly we're seeing interest in it for buying out land and buildings and for local food initiatives. Next slide, please. So there you have some more figures. It is a growing movement, and it's certainly something that government is particularly interested in because they see this as a way of raising money against things that they think are important without them having to dip their hands in the pocket. I think that every pound raised locally through this kind of equity offer is a really good lever for grant and other loan money. Next slide, please. Okay, so just one example set up here in Yorkshire. Headingley Development Trust had the right legal structure in the Industrial and Provident Society. They registered and issued a share. They issued an offer to raise share capital in order to buy an old primary school. Headingley is a district that is full of students, and the local residents were frightened that this, like so many buildings in Headingley, would turn into yet another building to house students, and they wanted something for the long-term residential community. The 105,000 against a much larger project. I think the overall refurb cost of this is going to be £2 million. In the end, was the important equation, I think, in persuading Leeds City Council not to sell this to somebody who was going to convert to student flats. There's one more example, I think, Vicky. Okay, this is a classic community energy. Actually, community energy is able to offer fairly good financial returns. The difficulty with, particularly with wind farms, is getting the planning permission and finding the site. But once you've found that, the numbers are pretty predictable. The technology is tried and tested, and so these people were able to raise fairly substantial amounts of money because they're offering you know, really quite a decent financial return, although a lot of the people investing in community energy are also local people, and so it does have a great social impact as well. To raise this amount of money, they actually did a fully authorized share launch, and you see the much higher cost of a share issue. Community share issues, we reckon, can be done for about £5,000. This was a full offer where you have to have a independent financial advisor auditing and doing due diligence on everything that you say in your offer document, and that's why the expenses mount.